What's up, everyone? In this video, I want to break down a lot of trades that I've taken this week using a very simple strategy off of the same exact levels pretty much every single day since Monday to Thursday. I've taken a trade based off the same levels. I want to explain why I created the levels, how I did it, how you can too, and I want to go over my wins, my losses, what I did right, what I did wrong, where my stop losses were, where my entries were. Before we get into it, I recommend everybody to follow me on my Instagram at Ameritrade. This is my only account. I'll never follow you on there, and I will only respond to messages. But on my Instagram, every single day this week, I've been highlighting these two important key levels, recapping these trades that I'm going to go over in this video, that if you are a follower, you would have been very aware of them. The link will be in the description below. You're missing out if you're not following this resource. But now let's get into these trades. So the two levels that I need you all to be very familiar with, because every day was with the same levels, is 4168, which is this blue line, and 4162, which is this red line. Directly below these levels, we also had demand at 4145. Keep an eye on these levels because these are very important this week, because if we were to just zoom out, we're going to see that the market essentially is in balance, meaning we're in a tight range where inside of this consolidation range, these levels are going to play a very important role. So the market opens up on the 17th of April, which was Monday. And in the intraday commentary tab of the Discord, this is where I update my thoughts throughout the day of what I'm watching, levels, scenarios, just my overall thoughts of potential trading setups I'm watching out for. So at 10:03 a.m. Eastern, I said SPY, or the S&P 500 ES, 4168 to 4173 is a new key level which developed for me. If by 10:30 a.m. Eastern time, an hour into the market open, the first hour is the most important hour, if we can close under this 4168 level and reject it, I want to lean on the short side, targeting 4159, 4145 demand. Now, why this level was so important is I pulled up the depth of market here, and very simple, because a lot of people are going to look at this and be very confused. And I'm going to make more videos and add them to the A to Z course on these subjects of order flow. However, what we're going to see here, where I'm highlighting right now, the column all the way down is what's called delta, which is the ask volume minus the bid volume. So when we see a lot of blue or green or whatever color, meaning there's more aggressive market buyers than there are more aggressive sellers at that price. And when we see red, we know there is a negative delta, which is more aggressive sellers than aggressive buyers. This column right here is the bid on the level 2. And this column right here is the offer or the ask on the level 2. This right here is a volume profile split between bid and ask. And this gray column is a session volume profile. What we notice here is the market really hasn't picked a direction. We are very balanced. We are very choppy. And we've moved in a range where we have a high of 4169 to a low of about 4160. If we go to the chart, we could obviously see this. We see the high at 4169, we see the low at 4160, and we see the market for the first hour very flat, very choppy, and very consolidated. What we don't see on the chart, and what we could only see if we were looking at the orders coming into the market, is at the highs at 4168, 4169. We see a lot of buyers who are trapped at the highs, and at the low at 4162, 4161. We see a lot of sellers who are now trapped at the lows. When the market is balanced this way, once one side goes underwater, it's going to fuel a further move up or down. That's why I said if by 10:30 Eastern we can close under this level, reject 4168, I want to play the market short, targeting 4159, 4145. And at 10:29 Eastern time is when I took the S&P 500 short at 4166, targeting 4159. It was a very short term, very quick scalp. It was a 2-to-1 risk to reward, and I made a little over 3,700 on this trade off of that simple analysis that every single time we came into this 4168 level, as you can see it here in the live replay, we come into it, we reject, market moves back lower, and I'm going to speed up this replay even more. You're going to see aggressive selling come into the market, and we hit my 4159 target, and I got out of this trade very fast for a quick profit. Now, if you noticed two things, the market's volatility has been lacking, the volume in the market has been lacking, and the intraday context has also been very balanced with low volume and low volatility. In these conditions, and you're going to notice the next couple of trades during the week, I have been taking profits off the table very fast, and I have not been having FAR targets. The ones or the traders who have further targets than normal are ones who are going to struggle because they are not letting the market give them what they have to take. Here's that sell-off. I sold into this push, and I could have kept holding, and I could have made more profits on this, but I took it off the table when I had it, and then the market began to rally after that. Now, in the afternoon session, I did a live trading session with Entrepreneurship members. If you're a member of the community, check out the live stream tab on the website. And we caught an end-of-day rally when the market rallied up, and that same 4168 level acted as support. We took the market long with a very tight 4-point stop loss, targeting 4184, 4181 supply at that time, where the market failed to hit it end of day, and we took a 5-point scalp going into the close on the live stream. The point of this is the 4168 level acted as support perfectly, which is what it's going to do later in the week. Now we're on April 18th, which is Tuesday. My pre-market plan, again, I post these every single day in the Discord. Scenario number 1 was support comes in around 4176, 4168, which was that same key level from the day prior. And in the intraday commentary tab, 7 minutes before the market was open, I established a support level at 4188. I said, if we can break below this at the open aggressively, I want to scalp the market short, targeting 4177 to 4168 key level. Well, the market opens up, and that 4188 level acted as support very well. We got a bounce up above that level, rallied up after all that aggressive selling got hit at the lows. Now at 9:54, before the move happened, I said I'm trying the market short at 4190, targeting 481 first, then that same range from the day prior at 68. Stop loss was only 3.5 points, and we needed that 4188 level to crack, which you can see from the chart. We were holding it very well. It also aligned with the purple line, which is VWAP. And here's my entry at 9:54. It was a little under $5,500 profit. My stop loss was above this little wick that we created on the rally, about 3.5 points. Really, really small risk. And what I want everybody to see here is I'm going to replay this and watch the aggressiveness that comes in once we break below this 4188 level. This is exactly what you want to see, and what you're going to see it on the chart is this right here. Let's replay this. Watch this aggressiveness come in. Boom, aggressive selling hits the market straight down. This is exactly what it looks like, and I sell my position into 4177, no questions asked. And again, similar to the day prior, I could have held this and made an extra 10 points and made an extra $5,000 profit on top of that. And we hit 4168 multiple times after that. With this 4168 level acting as support, we see a ton of aggressive selling come into the market, meaning there are sellers entering the market aggressively with large size, yet something is holding the market up that we cannot break below 4168. What that tells me is there's a passive buyer absorbing all the aggressive selling at the low. That's when I'm in the intraday commentary tab at 11:30 saying if the S&P 500 breaks low a day, which is where my cursor's at 4166, yet we don't trade below 4162, which was that key level from Monday, and we move back inside of this range, also known as 68, I want to play the market long, targeting 4180 to 4182. So it's as simple as if we break the low a day, but that low a day break doesn't go deeper than 4162, and we start moving higher back into the range above 4168, then I'm going to look to play the market long, targeting 4180. This was at 11:29 a.m. Eastern. Then at 11:42, I entered the market at 4170. Stop loss, 5 points lower, targeting 12 points to the upside at 4182. This was a smaller win because I didn't get my 4182 target by the time I sold this position. But essentially what this was a low a day, break to the downside, right? Strong volume on that break, meaning sellers are entering the market, yet we cannot move lower. There's a lot of trap sellers at the low. We come back into the range, and 11:41 right here, this green candle is when I got my long side trigger. My risk very, very small, getting in before the move. It acted as support, and then we rallied right up into the 4180, but I got out before that once VWAP was acting as resistance. Similar, I could have held to this 4181, 4182 level, and it acted as resistance all day at 4182 very, very well. Now let's go over the plan from Wednesday, April 19th. The scenarios were the same. We had 4168 key level, and we also had demand at 4145/55. Scenario number one was the bearish one that I was looking to short any failed rally or any signs of resistance at 4168, 4174, targeting the demand below. And scenario number two was if we bounce off demand and reclaim 4168, 4173, it's a bullish indication for me, and I want to play the market long, targeting 4182, which is that same level from yesterday. And I forgot to mention we had a new zone at 4155. Now the market opens up and we get a strong push up into 4168, and I took the market short at 1042. I said I'm trying it short, 4169. I'm targeting a sell off into the 60s first. Then comes pre-market low, which was at this demand zone. That's when the market looked like this. My stop loss was above 4175, which was a pre-market resistance. Then directly after I entered this position, we kept bouncing off of 4168. That someone was buying it. They kept reloading the bid on the level 2. Don't know what to make out of it. Maybe it's someone exiting a position. Maybe it's somebody opening up a new position. But it was strange how it was occurring directly at that 4168 level. And I kind of viewed this as a red flag, meaning that if we don't break this level, I'm just going to exit the position early before my stop loss. This is adapting and reading what the market provides you and not being so rigid. Sometimes the market will present you with new information that you might not have had before you entered that position. And you got to react to that new information because it's going to give you things that you're going to change that setup that you're in. In this example, we kept bouncing off of 4168, which I said it's not good if we don't take this guy out. We got to do it hard and we got to do it fast. And we just kept bouncing off this blue line at 4168, kept bouncing off of it. We broke below it and then immediately started to come back into this level. And I got out for a 1-point gain. It was an hour worth of a 5-point range. And I just took my profits when I was small green on it. And this was a good move because eventually the market started to come up even higher. Now, looking back at this chart in hindsight, I should have taken the market long, but everything looks better after the fact and everything looks better in hindsight as 2020. So from my pre-market plan, I said that this is bullish in itself. If we bounce off 4155 and reclaim above 68, it's a bullish indication for me, and I want to play longs targeting 4182. Here's that bounce off demand. Here's the reclaim above 4168. We're finding acceptance because we're bouncing off that level, and this was a bullish indication for me. However, I said the problem with getting long here and why I did not take the market long, and after reviewing it, I should have taken the market long, but I did not, was the volatility was dead. The market moved in a 5-point range for like an hour and a half, and then I'm also buying the highs with those two scenarios where it just doesn't make sense from a probability perspective. And this was a very good example. Now, the last one on Thursday, April 20th, the day I'm recording this video, the pre-market plan was very straightforward. We had demand at 4145, which is the same level we kept bouncing off of, and we had that 4168 level. I said, I want to short any rally into 4162 or 4168, targeting 4150. Keep that in mind because this happens later in the day. 2 minutes into the market open, I took the market long off of this example right here. We hit 4145 demand at the open, and all we needed to see was aggressive market buying at the open, and our longs were looking to target 4162, 4168, which are those same exact levels. The market opens up, we see the aggressive buying, I take it long, I put my stop loss below the low, and I'm targeting those levels above. This was a $5,600 profit. It was about a 2-to-1 risk to reward, and I sold a little before my target, which made it a little under a 2-to-1. So we got to rally up, and then we got to pull back down. And I'm going to be completely honest. I had my finger on the trigger to sell this position and stop out for a small loss on this pullback because I didn't trust the pullback. However, I held it because I knew a lot of people were getting longs on this breakout due to the recent context of the sell-off. And I knew there was a lot of upside and structure which needed to be cleaned up, whether it be soon or whether it be in the afternoon session. We rallied right into 4162, and I exited this position on the first sign of weakness. The biggest things here was the structure that needed to get cleaned up above from this sell-off overnight, was the bounce off demand, was the aggression at the market open, and was the weak VIX. VIX has been very, very weak, meaning dips to the downside have been short-lived and the market's been bouncing when many are getting short. 4162 acted as resistance for a nice little 10-point sell-off to the downside. I did not take the market short on Thursday. I want to make that very clear. Then we rallied into 4168. Really nice sell-off from that level. The same exact level was formulated on Monday, acted as resistance again, where we found sellers and could have provided another sell-off. So that was pretty much it. For the first 4 days of the week, it was a really good start to the week, and these levels have been left on my charts because the market is inside of this range. Simply finding them with the tape and using the tape to confirm our entries, confirm our exits, confirm our stop losses, and going with the flows of the market. Develop a deep relationship with price and volume, and you will see the market from a different angle. As I mentioned from earlier in the video, I will be adding a full section to the A to Z course about reading the tape and order flow. Although I do have a tape reading section in there, I will be adding videos more of in-depth order flow strategies without even using charts to go over how I've been taking my trades recently, because it's very, very powerful going with the flows of the market. So definitely check out the links in the description below before I do raise the prices of the course. When I do add all this value, like this video and comment if you have any questions. I'll go through the comments. I hope it helped, but I'm ending it. Peace out.